Hi everyone, this is Anti. Welcome to another live and wealth mastery stock market today. It has been very volatile. As you can see, compared to several weeks ago, the S&P 500, the Nasdaq, the Dow Jones have been trading upward at a very significant return for a lot of investors. Everyone is happy, right? When the market is keep on hitting the all-time high. When what happened last week, starting on Wednesday, right? A lot of pullback, and then the sell-off begins around Thursday last week, and then Friday the market traced back, doing a lot of consolidation, and then once the closing bell on Friday last week before the Labor Day, the stock market start to go down further, particularly in the high-tech sector. I hope you have already cashed in your profit. Take back some of that profit, okay? Because I'm a firm believer that you have to always secure your profit. Don't be greedy, okay? So as of last week, Monday, I start to pull back some of my position in the high-tech company and also in Tesla. Here I'm sharing with you a little secret. I buy when other people are selling, and I will sell when other people are buying. Just like Mr. Warren Buffett said, be fearful when other people are greedy, and be greedy when others people are fearful. And that's pretty much the simple of investments. And I will share with you quickly how I'm going to position myself in the next few weeks here. If the stock market starts to pull back even more in some of my favorite stock, right? You need to write down one of your favorite stocks, and when it hit a certain price that you're willing to pay, you acquire them, okay, slowly. When it hit 5%, I will buy. 10% drop, I will buy. Another 20% drop, I will buy some more. Okay, and 30% is like super sell for me, but only on the fundamental great stock that can hold for a long time. And another position that I'm in is gold, silver, and cryptocurrencies such as Bitcoin and Bitcoin Cash and Ethereum. Okay, so and now with the low interest rate, my position is I'm gonna start to go back and hunt good multi-family unit real estate. And I don't just look in California. We actually have company that I partner up with my partners. We actually building houses over in Idaho, and we even do business in Florida. And Florida market is steamy hot right now due to the migration of a lot of people that, because of working from home, they actually don't have to be here in California. They actually go to another area what's more affordable of their choice. And Idaho is another one, and another Ohio, and then Colorado. Denver is skyrocket right now, the prices. Texas, Austin, Texas has been on the rise. So I give you that as an example. But hey, I'm going where the money goes, right? As an investor, I look at how can I maximize the return on my investment at the least amount of time. So right now, I'm start looking more and more into real estate because of the low interest rate. And it's going to give me a passive income and appreciation at the same time, like icing on a cake. I would do it in a heartbeat, just like that. So that is my position in the next few months and even a year from now. I will continue to acquire whatever I make. I will continue to contribute back into my investments. And stock market, I'm glad to see that it's actually have a correction and do some pullback. It's perfectly healthy. 10% drop in the stock market is called a correction, just a friendly reminder. And 20% drop is a bear market. So the bear market is maybe almost here, but it's not a bear market yet. Okay, we're just giving back to the market, just some pullback, which is perfectly healthy and normal. And for those of you who like to play aggressively with the stock market after this pullback, we don't know if it's already hit the bottom, or are you trying to catch a falling knife? It's so dangerous right now. So let's say you have some money of your saving instead of putting money into a CD account, which earning virtually, like literally less than 1%. Yes, how are you gonna diversify and hedge against inflation? As you know, the Fed keep on printing money and the dollars depreciate. And if you hold cash, like Ray Dalio, the great hedge fund manager, he say cash is trash, which is true. I mean, look around. You can start seeing that some of the items that you purchase on a regular use, such as milk, food, daily stuff that you consume, things have gone up because of inflation. And also inflation is diminishing the value of your assets, such as the dollar that you have. So for me, let's just say if you have $10,000 sitting in your bank account right now, tomorrow, if you wait a year from now and leave it into your bank account, right? Inflation right now is at 2%, right? And the Federal Reserve keep on saying they try to keep it low. They try to control the inflation. How can you control inflation if you keep on printing more money? Now take a look at the Federal Reserve's balance sheet. The Fed is now owned nearly 1/3 of all the U.S. mortgages. They've been spending up to $1 trillion since March on the mortgage-backed securities. $7 trillion in securities, $2 trillion in mortgages, and it's not going to stop anytime soon. They keep on acquiring more debt. Okay, and how you going to protect your family to hedge against inflation? Like, this is what I do. I mean, it's up to you, and talk to your financial advisor. I'm sure you all have one, and then do your homework. What I do in the last 2 years, and I can see the market has been performing very poorly in the CD or the saving account. So what I do is I start accumulating precious metals such as gold and silver, and then cryptocurrency. I have about 10-15%. Now I'm starting increasing more position into cryptocurrency such as Bitcoin, Bitcoin Cash, Ethereum. So those are the three that I'm holding, and you just buy them slowly. I'm not saying that you're gonna go all in. You know, it's like treat it like a gambling. No, what you do, you be consistent and persistent and disciplined. Every month, instead of spending money into some of the stuff that you don't need, why don't you just start now? Always good to start early, okay? Because you can never time the market, but pick out some of the stock, some of the stuff that you use daily, some of the stuff such as your iPhone, iPad, you know? If you're still using those and you see people around you still using it, Apple not gonna go anywhere. Same as Google. I wake up every day, Google me this, Google me that. So I know that Google will be a good long-term stock. Tesla, I drive a Tesla, and I know a lot of people want to test drive a Tesla. If you can afford it, you will definitely buy a Tesla. Let's go over one of my favorite stock, Tesla. If you own this stock for 1 year, you experience a tremendous growth of 640% return on your investment. And if you just recently started a month ago, you still experience a 10.5% return on your investment. But not for those who not that fortunate late in the game that bought this stock last week, you will be experience a loss of 33%. What happened? Competition. GM and Nikola enter partnership, and they try to take over market share of Tesla. Temporary, yes, you will be experience a pullback due to this news. But Tesla will continue to grow in the luxury electric car with a loyalty brand name and loyal customer base. And with the recent stock split 5-to-1 ratio, it makes it affordable for retailer. Make it a lot affordable for a lot of people can get into buy Tesla. And keep in mind, Tesla is not generating money from selling electric vehicles. It also invests heavily into the renewable energy. They do a lot of energy generation and storage segments, including the design, manufacture, installation, sale, and lease of stationary energy storage products and solar energy system. Yet there are always competition try to grab market share from Tesla, but they are continue growing rapidly throughout not just the United States, but all around the world. So my take on Tesla is, if you believe in Tesla for future growth, this is a good stock to own for the next 3 to 5 years. And don't forget, Tesla Battery Days is September 22nd, reviewing about the 1 million mile battery. This could be a game changer for Tesla. If you are bullish, time for you to get in at $320. It's a fairly reasonable price after the 30-something% dip. And if you have a high risk tolerance, keep in mind this is a very volatile stock, and but a big reward. So keep that in mind. If you don't have a stomach for it, don't invest into Tesla. And Square is another company. SQ is a simple the stock. I love this company. I bought it like around 112, and it hit $161.50 last week, and I sold it. And now I'm looking to buy back on the dip. It's gonna drop like around $120. I would definitely buy for me. This company is created and run by the CEO of Jack Dorsey. He's the one that created Twitter. Same guy, a very innovative leader. I love him as a CEO, and he is the one that created Square. And it's pretty much a credit card payment processing solution. It's one of those little machines that you see at the restaurants, at the coffee shop area. It's very quick and easy to charge the customer the credit card. So this is one of the company that I'm definitely going to invest and hold and add into my long-term portfolio. Here are the 2 stocks that I want to add into my long-term portfolio. I sold them that last week when it at the all-time high. I'm not greedy, like I said. I exited, and now I'm looking at them again to see if they drop, and I will buy back. Keep in mind, Apple stock did a recent split 4-for-1 on August 31st, 2020. What does it mean? Let's say at that time Apple was trading at $400 a share right on the day of the split, which is August 31st. That person, let's say they own 1 share of Apple worth $400 a share. Now they own 4 shares of Apple worth $100 a share. Should you buy right now? In my opinion, it depends. You know, if you're gonna hold this for a long term, it doesn't really matter. It's a great company. Apple gonna be here for a while. We continue, every single one of you, I bet, if you check out your household, everyone probably have an iPad or a MacBook or an iPhone somewhere, or someone that you know, right? So Apple not going to go anywhere, and they invest into other artificial intelligence that for the futuristic stuff coming in the next few years here. And it's a $1 trillion company. It's have a lot of cash. And even we have a Great Depression, Apple going to be fine. So as you can see, both of Facebook is the bottom here. Facebook has experienced a tremendous growth as well. And as you can see, back in March, where we have a heavy dip in the market, everybody was scared around March time, middle of March. Will this stock will be back to that same price like it used to be back in March in a dark day? Maybe, possibly, maybe not, right? But like I say, you can, if you have some money, if you're using dollar averaging cost method, like I mentioned, every month, be disciplined, just buy some of your favorite stock and don't touch them, add it into your long-term portfolio. Okay, but market, yes, I understand there's a lot of talk about a bubble, right, in the tech world. Yes, possibly. But again, that's something you and I cannot control. The only thing that we can control is make sure that you have enough liquidity, meaning you have enough money so that you can strike and attack when there is a deep discount that's going to happen, who knows, in the near future, right? As an investor, you always make sure you're not in the position where you are forced to sell when you needed the money, but have a good amount of cash laying around that you can easily get into to buy things at a discount. So that is my take on the whole picture of our current investment scenario. So I hope you find this video helpful, and if you like, don't forget to give me a thumb up and subscribe. Thank you so much.